My guest today is Wayne McDonell of FX Bootcamp. Hi, Wayne.
Hi.
We talk a little bit about risk in creating a trading plan and, of course, having the discipline to stick to it. But how do you manage risk? How do you manage risk?
Well, risk starts with your bias. Are you bullish or bearish? And if so, how bullish or how bearish? This is very, very important, especially if you're looking at longer term charts, let's say daily or weekly or even monthly charts. You may be bullish, you may have an opportunity to trade, but how much risk you're taking to get into that trade is important, and also how much room you have to breathe within that trade is very important. So there are many strategies. Of course, you always use a stop loss. You cannot lose more money than the trade is worth, and as a professional, that's my chief concern. Is you know, I try to make money, but the number one thing is never lose money, never lose money. So I have to be very, very keen on sort of you know, the likelihood of things going my way. So again, if I'm very aggressive, I may want to jump in a little bit earlier, but therefore I should have a stop farther away. And if my stop's farther away, one of the things I'll consider doing is lowering the size of the trade. So I might start with a little bit less money, but because I do that, I can put my stop farther away, and therefore the risk-reward ratio is the same. And then as time goes by and more evidence appears that that I was correct in my hypotheses and my trade plan is profitable, I may add another trade, and now that I can take some risk off the table, I can put a little more lot size on there.
What's your basic risk and your minimum risk-reward ratio that you look for?
Well, that's a really tough question because it depends on the type of trade. So I scalp trade, I spot trade, I swing trade, I carry trade, and they all have different risk-reward ratios. So if I'm scalping the news, I'm trading the emotional response to new information that hits the market, and I may have a stop loss that's very, very, very close to the market. It could, in the Forex market, it could be as little as 15 pips, which is really nothing, and I'm not putting a whole lot of money on the line either. However, if I'm carry trading, that's a trade that I'm hoping to have not just minutes, but days, weeks, and perhaps even years. And so I will have a stop loss that's much, much, much wider, and therefore I'll have a much smaller lot size, and then I'll slowly scale up as my analysis is proved correct.
Wayne, thank you for sharing with us.
My pleasure as always.